What is up, YouTube? I'm Adam O'Dell, Chief Investment Strategist of moneymarkets.com. And this week I have a very special guest. We have our resident crypto expert, Ian King. He is super knowledgeable on the subject, certainly knows far, far, far more than I do on it, but we wanted to bring him on this week. He sees some great opportunities in crypto, not all throughout the crypto space, but certain pockets. So he is the guy I go to for information on the crypto market. So Ian, welcome to the show. Thanks for joining us.
Adam, thanks for having me.
Wonderful. So I've got a list of questions for you here today that I'm most curious to answer for myself, and I'm sure our viewership will be interested as well. The first question is Bitcoin versus Ethereum. Do you prefer one of them over the other? If I could buy only one of them, which one at this point in time has a brighter future?
You know, it's hard to choose between the two, and it's kind of like saying, like, which child do you like better, you know? But if I had to bet on which would appreciate more over the next decade, I would put my money in Ethereum. And let me explain why. Now, Bitcoin is the first iteration of a cryptocurrency. It solved a fundamental problem in computer science called the double spend problem, where you can send, digitally online. If you don't have an intermediary, you can send money to two places at the same time, even if you don't have any value in your bank account. But Bitcoin actually solved this problem by creating a decentralized network of computers that were constantly validating any transaction that happened on the network and basically keeping track of who owns what, right? So in the Bitcoin network, I can send you Bitcoin and that transaction can be validated not by a centralized intermediary like PayPal or Square or Bank of America. It's validated by this decentralized network of computers. And that was the first iteration. But, Bitcoin has its limitations. It's not programmable. And so the solution that Ethereum came up with is it has the same properties of Bitcoin. It's a decentralized cryptocurrency. Its properties the transactions are validated by a network of computers. But you can write script on top of it. So you can do fundamental programming language. If certain conditions are satisfied, then money can be paid out and Ethereum can be paid out. So it allows for different types of protocols, whether it be decentralized finance or non-fungible tokens or just provisioning anything that's digital to be built on top of Ethereum. So it's really like the building blocks of the new internet.
Okay, that makes a lot of sense to me. Is there also a factor, like we know in stocks, there's a small cap effect where smaller companies tend to outperform larger companies over time? Is that I gather that Ethereum is smaller than Bitcoin at this point, and do you think that there will be better returns ahead because of that? And at some point, do you believe that Ethereum will surpass Bitcoin in so-called market cap?
So that's a great question. Think of Bitcoin as being a digital store of value. Okay, so it's the first digital thing that's like gold. And we know there's limitations to gold, right? There's $9 trillion worth of money stored in gold in the world. There's $1 trillion in Bitcoin right now. I think eventually Bitcoin probably gets to the same value as gold, especially because you see younger generations that are more favorable towards investing in Bitcoin than gold as a store of value. And then, also have that macroeconomic factor where you've got countries all over the world spending way more than they take in tax revenue. So people worried about their own domestic currencies will move into an alternative currency. But Ethereum is different in the sense that its value is essentially unlimited, right? So the things that you can build on Ethereum, and I wouldn't just say Ethereum is called a layer one, which is basically a building block. It's the Lego blocks, but there are other layer one protocols. And I think we're going to need them to power these smart contracts, as basically the physical world moves to the digital. Now, think of like all the services that happen online. And this can do anything from like the way you bank online to the way you get cloud storage to computational power. And then think of a future where those services are provided not by a centralized thing like Amazon Web Services, for instance, for your cloud, or a telecom company for your internet, but powered by a decentralized network of computers where anyone that has idle resource can contribute to the network. Okay, so if you think about how Uber just disrupted the entire taxi industry, right? Uber is basically a decentralized version of taxis, but they're also a centralized intermediary. That's how you can think about how some of these crypto protocols are going to disrupt some of the businesses that we have today. And one of the reasons why I think that this is an existential threat, essentially the banking system, because this is a technology that keeps track of who owns what in a better way than we have in the past. And now we're moving to building the same type of financial services on top of it that we use in the real world. They're all just going to be natively digital.
Interesting. Okay. So it sounds like a very bright future for Ethereum. I get the fact that it's very customizable and programmable, and that definitely seems appealing as far as we go forward. As far as an investment case, one way I would look at it is kind of something of a barbell approach, where you might invest an allocation in both Bitcoin and Ethereum as the top dogs, and then an allocation in much, much smaller other tokens and more speculative things. But at the same time, I know that all the firms are trying to get a Bitcoin ETF out there, and it's been many, many years of a slog. There is the Bitwise Top 10 Index Fund. I don't think it's not actually an ETF, but it's ticker symbol BITW. Do you have an opinion on that?
I would stay away from those ETNs. I think that's an exchange traded note. Same thing with GBTC and ETHE, because they trade at a premium or discount to net asset value. Sometimes, especially I think the Bitwise, I haven't checked it, but I know it's consistently traded at a really high premium. So you're not getting the value of the underlying. And I know a lot of people like to buy those because they're easy to put in retirement accounts, but when it comes to cryptocurrencies, there's really no substitute for owning the real thing. And 5 years ago, it was really difficult to get the real thing. There was Bitstamp, which was sort of a wacky exchange. The custody solutions weren't there. But now there's no friction. You can go right to Coinbase, you can go to TD Ameritrade, you can buy cryptocurrencies on Square's Cash App. So there really are way more ways to onboard into the crypto world, and on top of that, once you have, let's say, Ethereum, you can then go stake your Ethereum and get returns in different decentralized finance protocols, or you can invest in, let's say, NFTs on OpenSea. And there's other things you can do with it than if you just had it in an ETF that was stashed in a retirement account.
Gotcha. So it sounds like, owning directly, and nowadays that's more possible and certainly easier. So that was my hunch as well, and I'm glad to hear you explain that for us. Now, you mentioned NFT, so that was on my list of questions as well. My dad was visiting us a few months back, and he's out back on our porch reading on his phone in the morning, drinking coffee, and I come out there, and the first thing he says to me is, "Adam, what the hell are these NFTs?" So I kind of see that as like the shoe shine boy indicator. With my dad, who has very little interest in investments, certainly in crypto, is talking about NFTs. So I guess first question, is it a sign of the top in NFTs that my dad is talking about it? What are NFTs? I certainly realize they can be speculative vehicles. I see them something as a status symbol, people that have crypto wealth want to buy things to show that they've got them. But is there a legit use case for NFTs, and what would that be?
Sure. So NFTs stands for non-fungible tokens. And so think about Bitcoin is a fungible token, which means that any Bitcoin can be exchanged for another one. They're basically the same thing. A non-fungible token is something that's unique. It has specific properties that are, only unique to that non-fungible token, excuse me. And so in doing so, you can create something that's a piece of art or a piece of music or a video, encode it on the blockchain, and then the ownership of that piece of art can be tracked. Okay. So did you collect baseball cards growing up?
I did, yes.
Okay. So you kind of have that collector's mindset, but if you wanted to buy or sell a baseball card, you had to go to like the baseball card shop, or maybe you would trade them with your friends. In a similar way, you can collect a non-fungible token, and then you can just trade it online on these marketplaces, which are very liquid. And there's lots of like new generative art coming up. Now, there are different types of NFTs, and I'm just going to explain the ones that are really popular right now. So there's a class called generative art, and it's basically a new movement in the art world, which an artist will decide that he wants to make a limited amount of some piece of art, and every token in this art class is going to have different properties. Okay, so let's say take CryptoPunks, for instance. Are you familiar with CryptoPunks?
Yeah, I've heard of it, yeah.
Okay, so CryptoPunks are these little, digital looking people, and they all have different glasses, different skin color, different hats. And what happened was, when CryptoPunks first started, they created this program that said, if you send a little bit of Ethereum to this protocol, you're going to get back one of these NFTs, non-fungible tokens, CryptoPunks, and each of them is going to have different properties. And so there sort of is like a, scratch off lottery aspect to these generative art pieces where you don't know what you're going to get. You might get a rare one. It could be worth a lot. And you contribute a little bit of cryptocurrency to it, and then you get a non-fungible token back. Now, this has just unleashed an entire wave of manias. Now, why do people value CryptoPunks? The cheapest one you can buy is about $500,000 right now. And the rare ones go for 10 million. Well, the reason for it is like, why do people in the real world value Louis Vuitton bags or expensive watches, right? It's this conspicuous consumption that you are either a first mover into something, you either got there early or you have the money to spend on it. Okay. And now this starts to take us into the metaverse world, which is anything on social media like Twitter or Discord or Facebook. And now you have this picture that you might have spent a couple $100,000 on, and you could put it as your profile. So instead of having, your face, Adam, which of course you're a very handsome guy, instead of having that, you could have the CryptoPunk that you purchased for $500,000. And now that sends a signal that you either were first in something or you're very wealthy.
And what's more handsome than that, right?
Of course, exactly. And so it's basically the same type of consumption we see in the real world is now in the metaverse world. And your dad's interested in it. And of course, there's a mania. I always say, go back to George Soros. He says when he sees a mania, he buys with both fists. So I think that you have to have a plan of getting out. I wouldn't advocate leveraging all of your crypto assets into NFTs. But, if you can get in on a project that is a nice piece of art or something that you're interested in, and don't overload yourself into it, obviously, and make sure you have ample liquidity. I think it's an interesting market for everyone to look at and something to invest in.
Okay. Well, I'm an options trader, so for me, the convexity of the returns is attractive. I certainly see the limited downside and huge upside. So I like that as well. Now, would you recommend OpenSea, or I see that Coinbase is actually moving into NFTs now? What's your thoughts on that?
So OpenSea is the largest NFT market on Ethereum. Okay. And, when users go to OpenSea, they got to be very careful because there's a lot of like scams and frauds there. So when you go to OpenSea, if you're looking for CryptoPunks, make sure there's a blue check mark and it's a verified collection. Then Coinbase is also moving NFTs. I think they're a little late to the game, even though I think on day one, they had like 500,000 people sign up or something like that. There's also different chains. So OpenSea has NFTs on Ethereum. Solanart, which is SOLANART.io, has NFTs on Solana. There's StaxArt, which has NFTs on Blockstacks. And there's other, these protocols that are just similar to Ethereum that are also starting their own NFT offerings and communities around them. So OpenSea, obviously the biggest one for Ethereum, and then Solanart is probably the second largest exchange. Another exchange that people may have heard is FTX. They sponsored your Miami Heat Airlines Arena. Right. They're also a sponsor of Major League Baseball. If you see the umpires during the games, they got the FTX insignia. They're launching their own NFT platform as well, which is going to allow people not just to pay in Ethereum, you can also transfer cash over and buy NFTs on FTX. So that's also going to drive more money into this market. And the friction is really subsiding, right? It's becoming a lot easier to buy and sell these NFTs. I think there needs to be a big aggregator because you've got so many NFTs in different places, trading at different prices. There's lots of arbitrages because even though they're non-fungible tokens, there's always like the common ones that sit at the floor that might be offered a lot lower somewhere else that you can, you're a trader yourself, you would lift it and then go sell it at another exchange. So I think there's still a lot of opportunity in the NFT space as it starts to really grow and flourish.
Well, yeah, and as you talk about an aggregator in different markets for their arbitrage opportunities, two things come to mind. One, that this is still an early opportunity, and number two, that a big key differentiator of the crypto universe in general is the fact that it's not controlled by one central body, not a government, not a corporation. So really, I mean, all my questions so far have been warm-ups. What I'm most excited to learn from you today, Ian, is decentralized finance. what is the end game for the decentralized finance revolution? Are the big banks, JP Morgan, Bank of America's, are they going under? Are the big card processors, Visa, MasterCard, are they going under? What is the biggest opportunity in DeFi that you see today? And how can you help folks understand what that opportunity really is?
It's a great question. So this is a fundamental shift in how we think about money and value. And throughout human history, this has happened, dozens of times. If you think about like in ancient civilizations, how they used to keep track of who owns what, they would build these temples and people would store grain or livestock and the temples would be guarded. And then, as human society evolved, we started coming up in the Middle Ages with gold coins and silver coins. And that's basically how we stored value in something that was fungible, that you could move from place to place and transact with. Eventually, you had to carry too much gold coin if you were traveling to another country as a merchant. So we developed the idea of a bank, which would give you a promissory note on the gold coins that you had in the bank. And then, that basically has been the way that we've managed value in society for the last 600-700 years. In the information age, the idea of a bank, rewind 100 years ago, if you've ever been to like Boston or New York, you go to these like old banks, there are these fortresses. And back then, the banks actually kept the money that people stored in the bank in a vault. Mm-hmm. Nowadays, your money is just on an online ledger somewhere in Bank of America. If you have, let's say, $100,000 in your local bank and go to take it out, they're not going to give it to you on that day, right? And so now that money is online, technology is coming up with better ways to track things online, better ways to settle things online and transactions. And this is basically what blockchain is. It's a better way to keep track of who owns what. And so your assets, right? I mean, you have like a TD Ameritrade account, right?
Yes. Mm-hmm.
Okay. So you probably own like, I don't know, Tesla or Apple or whatnot. And it just sits there in TD Ameritrade. It's an idle asset. It just does nothing. But TD Ameritrade will take your Tesla stock and loan it out and earn, 5% on stock borrow to somebody else who wants to borrow it and short it. Or they'll use your Tesla to make markets in it, right? And there's a whole thing with Robinhood right now where if people transact on Robinhood and they think it's free, but really their order is getting routed like Citadel and those other hedge funds that are making money basically just scalping and taking a small transaction fee on each thing. Mm-hmm. So what this is doing and what decentralized finance is doing is basically making your idle assets smart. And if you think about some of these crypto protocols that are being built. So the first one I would say on Ethereum was Uniswap. And this is a decentralized exchange that allows you, if you own an asset, especially a cryptocurrency, to put it in a pool and become a market maker and get paid market maker fees to allow your assets to be used to be traded against. Obviously there's some risk in there where if you put, let's say, Ethereum versus Bitcoin in one pool, and somebody comes in and buys your Ethereum and sells Bitcoin to you, you wind up with less Ethereum and more Bitcoin. So if the price of Ethereum goes up versus Bitcoin, you actually have what's called an impermanent loss. And I don't want to get too far in the weeds, but I think the key here is that all these financial services that we think about in the real world will be disrupted in the next 5-10 years by decentralized finance. And I watched Jamie Dimon speak, I think it was like 6 months ago, and he talked about these fintech companies that are a threat to him. The real risks in the world, and this as an option trader, are these unknown unknowns, right? It's these sort of black swan events. And I believe that decentralized finance is a black swan event for the entire banking system because it's a technology that just does things better and allows people to unlock value in the same way that Uber was an existential threat to the taxi industry. Before Uber came around, if you wanted to drive a taxi in New York City, it cost $1 million to buy like a yellow cab medallion. Now, they can't even sell these things anymore because all you have to do is just get a Toyota Corolla or whatever, sign up for an Uber, and you can become a taxi driver. Mm-hmm. The same thing is going to happen with technology, specifically blockchain and the financial markets. And I look at JP Morgan and Bank of America, some of these larger banks, as being, Borders and Barnes and Nobles back when Amazon first started. That's the old way of doing things. Amazon was the new way of doing things. And you know how that story ended. So either JP Morgan or Bank of America, you can see they're sort of moving into crypto, but it's more crypto research. They're not really launching their own protocols. And I don't see how really that these banks operate in the same ways that they do a decade from now. I know that's a big claim, but I've been saying this now since 2015, and it's really starting to gain traction.
I can definitely see how that is the future. I guess like with everything in investing, timing is everything. And I'm glad that you kind of used that Amazon analogy. I've actually done some analysis on Amazon's long-term returns. And obviously they, in the late 90s and early 2000s, they had a really strong run up, and then they had a huge sell off into 2002. And I think there was something like 7 or 8 drawdowns of 30, 40, 50%, large drawdowns. And the idea is that you have to kind of be in it for the long haul. I mean, Amazon wasn't able to revolutionize all the industries and e-commerce the way they have overnight, or even in a 5 or 10 year period. So I guess my last question for you, Ian, is like, what inning are we in? I mean, I played baseball. You sound like you're into baseball cards. Are we in the first inning? Are we in the 7th inning? Just before you answer that, I mean, you've had some monster gains already. I'm looking at gains of over 9,000%, 8,000%. 2,000%. So I see gains like that, and it makes me nervous that I've already missed the boat. Why should I believe that the best days are still to come? And what inning are we in this?
That's a great question. If you really, so rather than looking at innings, think about like bull and bear markets, right? And take a look at the chart of Ethereum. Ethereum peaked in early 2018, and then we had basically a 3-year bear market. And then we finally entered a new bull market in January of this year. Okay. So we're 9 months into this new bull market. And, I hate the term this time it's different, but with Ethereum, there are so many other layers on top of it that are being built that just weren't there in 2018, that we just didn't have the capability, we didn't have the functionality. On top of that, Ethereum in its current form is very expensive to use. If you go buy something on OpenSea or list something, it's going to cost you $50. If you want to trade something on a decentralized exchange, using Ethereum, it's going to cost you $75, $100, depending how congested the network is. But the solutions are coming, like within the next 6 months, there's going to be a big upgrade that's going to make everything faster and cheaper. So, in this bull market, I'd say maybe we're in the 2nd or 3rd inning. I think Ethereum can climb higher. I think, 10,000 is probably within reach. And you know how these markets trade. Ethereum above 4,000 is basically just price discovery time. Okay. So it's like it got to a new breakout point, and everyone who owns it doesn't want to sell anymore because they know that the price is going higher. And when you have all the owners start to believe that, and on top of that, you have more people seeing it and having complete FOMO, you can get these incredible price spikes. Now, it works on the opposite side as well. You can have incredible drawdowns. Ethereum, in a month in the summertime was down 60% from its highs. So I think from an investment perspective, you just have to understand how to position yourself accordingly. I always say dollar cost average. Let's say every year you want to contribute $5,000 to crypto. You break that up month by month. If you have a month where Ethereum has dropped, or let's say, you are going to contribute $500 a month to it, and it's down 10 or 20% of the month, you contribute 1,000. If it goes up 30% one month, you cut that $500 investment in half. So as long as you're dollar cost averaging and you're okay with the amount that you're risking, you're not going to freak out. Like a lot of people, they go into this market and they say, I want to invest $10,000. They put $10,000 in, it goes down 30% in a week. And they're like, oh my God, what did I do? That's the worst thing you can do. The crypto markets always give you an opportunity to get back in, and they always give you an opportunity to get back out or trim some, as they move higher. Very volatile asset class. I'd say probably 3rd inning in this bull market. I think that the end of this year, the returns are going to be incredible. I know that you pointed out that we have a couple gains of close to, 100x in some of it. We just happen to be very early. And also, this is one of these markets that, different from stocks, where you actually can get in on the ground floor before things launch or actually are used, because they sell the tokens to the public, not just VCs like the equity markets were.
Yeah, that's interesting. You mentioned that. I mean, I almost see it as a venture capital model where, these days companies are going public so much later once they already have profitability almost a lot of the times. And so they used to IPO a lot sooner and you still could get on the ground floor. And now if you're not a qualified institutional investor, it's hard to get into private equity companies. So this to me really looks like an opportunity, like you said, to get on the ground floor for people who are willing to kind of roll up their sleeves and do a little bit of research, or at least follow somebody who's in the know. So, well, Ian, this was extremely helpful for me to understand the crypto market through your eyes. I read your work. Where can our viewers read more of your work or find out more about you and get in touch with you?
So I think we're going to link to, we have a new webinar that we're publishing to talk about what I think is, the big investment ideas in the crypto space over the next year. Check out that webinar and then take it from there. And you can also subscribe to Winning Investor Daily, which is our free daily newsletter where we talk about crypto quite often.
Wonderful. We will definitely make sure to include that link because I know a lot of people will be interested in that. So thank you once again, Ian. I appreciate that, and hope to have you on again in the future.
Awesome. Thanks for having me, Adam.
All right. Wonderful.